Okay, let's dive into this. Welcome back to The Explainer. Today, we're taking a microscope to the global AI market. Now, if you've been watching the markets at all lately, you already know AI isn't just a sector anymore, right? It is literally the defining macroeconomic trait of our generation. But here's the thing. We're seeing this massive, fascinating tension between what the market expects to happen and what's actually unfolding on the ground. So we're going to unpack exactly how precarious the modern AI trade really is right now, weighing the baseline assumptions that fuel these monster rallies against the emerging realities that, well, let's just say they're starting to make Wall Street sweat just a little bit. Because here's the ultimate question every single financial investor needs to be asking themselves right now. Is the very foundation of the AI trade already fracturing? Think about it. For months, years even, portfolios have been weighted heavily, and I mean heavily, on a very specific set of core beliefs about who's going to win this AI race and exactly how that win translates into corporate profits. But as we dig into the latest reports and price actions, we're starting to see real cracks forming in that foundational thesis. And look, as an investor, when the ground underneath a major market narrative starts to shake, you've absolutely got to pay attention. So, the crucial point here is the sheer, mind-boggling scale of the capital involved. We're not talking millions. We're not even talking billions. We are talking trillions. Trillions of dollars are currently being funneled directly into American AI infrastructure. It's an absolutely staggering capital allocation. We're talking massive data centers, specialized chips, immense energy grids, all built on the expectation of just unparalleled ROI. The stakes literally could not be higher. When you have trillions on the line, even a tiny disruption to the expected narrative introduces massive market risk. And as we're going to see, the way this domestic capital is being deployed, it's a stark contrast to the highly organized, centralized infrastructure spending patterns we're seeing from foreign competitors. Which brings us to this razor-sharp observation from CNBC's Deirdre Bosa. She hit the nail on the head, saying, "The AI trade, it was built on a core assumption, American dominance. But that is falling apart." This right here, this is the central thesis of our explainer today. The bedrock of those trillions of dollars in investment was the ironclad belief that U.S. tech giants would maintain this unassailable, permanent lead in AI. But as geopolitical tensions heat up, that assumption is being stress-tested like never before. The unified strategies of foreign competitors are genuinely starting to challenge our totally fractured landscape here at home. Let's move to Section 1 and see how this builds Pentagon drama and infighting, domestic headwinds threatening American AI. Now, if we look at this clinically, purely as a friction point for the markets, the contrast is just glaring. In a perfect world, the market wants a coherent national AI strategy to protect and nurture those trillion-dollar infrastructure investments, right? But the current reality? Instead of a unified front, the U.S. government, specifically the Pentagon, is actively clashing with American AI companies. We're seeing reports of the Pentagon actually blacklisting certain American companies over their safety guardrails. And at the exact same time, they're reportedly fast-tracking a different deal that even the winner admits was rushed. So for investors banking on smooth government-corporate synergy to keep that market dominance, this lack of a unified national strategy is a very real, very immediate market risk. And this brilliantly illustrates the bind that American AI labs are stuck in right now. I mean, these are the exact companies supposed to be justifying those trillions in infrastructure spend to Wall Street. But instead of just keeping their heads down, focusing on innovation and deployment, they're totally bogged down by internal drama, they're fighting with the Pentagon over contracts, they're fighting with each other in a super fragmented domestic market, and perhaps the biggest red flag for investors, while they are entirely distracted by all this domestic infighting, they are losing users to Chinese competitors in real time. Section 2. Competitors capture U.S. users. The real-time shift in app traffic. Because while the U.S. is tangled up in infighting and fragmented spending, China's unified, state-backed capital deployment across military and commercial AI, well, it's giving them a massive edge in scooping up global market share. Let's actually map out exactly how fast this shift happens in the real world. Check out this timeline. Just recently, right before a Monday, the major American model Claude hit #1 on the App Store. Huge success, right? But then, on Monday, Claude crashes. And what happened next is what investors really need to let sink in. The immediate aftermath wasn't just users sitting around patiently waiting for a fix, no way. An executive at the Chinese AI lab known as GPU immediately posted that traffic to their model was surging, specifically absorbing those displaced users. The exact second an American model stumbled, a foreign competitor was right there, instantly capturing that highly valuable traffic. Talk about a wake-up call. Section 3. The sensor tower data. Hard metrics validating the narrative. Now, what's really interesting about this next data point is this single glaring number, 20%. In the hyper-fast world of app acquisition and user retention, a 20% leap it's absolutely massive. It represents a sudden tectonic shift in consumer behavior that algorithms and human analysts alike have to price in immediately. Let's put that number into context so we understand exactly what we're looking at. According to the data analytics firm, Sensor Tower, a model called DeepSeek, saw its United States downloads jump by 20% in a single day. Think about that for a second. This isn't some slow, gradual creeping of market share. This is an explosive, real-time capture of the American user base by a foreign competitor. For investors leaning on the hard data, this Sensor Tower metric is a giant flashing warning sign. It entirely validates the narrative that while American companies are tripping over domestic hurdles and technical crashes, competitors are successfully pulling off rapid user acquisition right inside the US market. And guys, the momentum doesn't just stop there. The market is already bracing for the next major catalyst. It's being reported that the next major competing model is expected to drop right alongside China's biggest political meetings of the year. This perfectly illustrates that unified strategy we talked about earlier, literally aligning technological advancement with major national showcases. It's a crystal clear signal that the competitive pressure on American AI dominance isn't just a fluke. It's continuous, it's highly organized, and it's deeply integrated with broader geopolitical milestones. Section 4. Reassessing the AI trade. What this means for your portfolio. We've synthesized a lot today, from the lack of a coherent U.S. national strategy to the Pentagon drama, right down to the hard Sensor Tower data showing users fleeing to competitors in real time. So, we end up right back where we started, facing the ultimate question for the modern market. Will the trillions of dollars poured into American AI infrastructure actually pay off? If the core assumption of guaranteed American dominance is falling apart, how does that fundamentally change your risk models? Wall Street is certainly starting to notice the friction, the infighting, and the rapid rise of foreign alternatives. It's a complex, rapidly evolving situation, and honestly, one that requires constant, objective reassessment. Thanks so much for joining me for this explainer. Keep your eyes on the data and keep questioning those assumptions.